Well, Australia's unemployment rate in March at 3.5% continues to be close to 50-year lows. Our business editor Ross Greenwood joins us live. And Ross, it's off the back of more than 72,000 full-time jobs being created.
Which is incredible. So this is a pretty stellar set of numbers. It probably goes against the grain of what many expected was for gradual rising in unemployment in Australia over a period of time. If we take a look at the actual number there, 3.5%, the forecasts have been at 3.6% with 20,000 new jobs created. In actual fact, some 53,000 jobs were created during the month of March. And as you point out, most of those were full-time jobs. And you can see here that just trajectory down in Australia's unemployment rate over a period of time to these levels of 3.5%. 3.4%, the lowest in 50 years, just going back a few months, but it has remained at this 3.5%. So it's good news. The other thing also is there's been a tick up in basically the number of full-time jobs, 72,000 you can see there, the participation rate. So one standout of this is the participation rate of women in Australia's employment markets, the biggest it's ever been, and so that is almost a feature. You might argue here that this is about higher interest rates and families needing more jobs and more income to basically cope with the rising cost of living. The number of hours worked was down slightly, but as I say, this really is a very, very strong set of numbers. It's strong for the government, but also strong for those families as well.
And it's that full-time employment story that really points to the fact that our employment markets do remain strong, even with more immigration.
Yeah, it does. And we can show you this as well, because it just goes to show that the number of jobs, and this is from the Bureau of Statistics itself, and effectively what it's showing is the full-time share of employment. So in other words, most of the jobs being created right now are not part-time jobs, they're full-time jobs. So of course, full-time jobs means A, the commitment of the people, but secondly, it means that there's more income coming into those families. So this continues the story that companies need workers, that there is a shortage of workers, notwithstanding the fact that there's a lot of immigrants now coming into Australia with significant numbers, hundreds of thousands of people last year and again this year coming into the. But those people are now being absorbed into our workforce. That also is good for the government because it collects most of its tax from PAYG workers. And so if those people are finding jobs as they come into Australia, then that clearly is also a boost for Australia's government budget.
And so in terms of the Reserve Bank, obviously we're always very keen to try to see this how they might see it. How do you think the bank will be interpreting this set of data?
Well, OK, so this is strong data. So what you've actually seen immediately is even some economists saying that this argues the case for an interest rate rise. My sense is the Reserve Bank wants to sit and wait for a period of time. This is where last night the rate trackers were basically using the money market, 94% chance of no change, a 6% chance of an increase. That will jump today off the back of what's happened on the money markets. But really, it's a situation where the argument is that eventually this demand for labour turns into increases in wages. We haven't seen that in Australia so far, and that's the next phase, because if all of a sudden the wages start to increase and the Reserve Bank has little choice but to resume those interest rate rises.
And what about the financial markets? How do they react?
So that's the interesting part about this. The prospect of interest rate rises, even though it might be at the margin, led to the ASX 200 suddenly taking a lurch downwards. Not a big lurch, but it's a lurch downwards. So we can probably see some live numbers from the ASX 200 here, basically showing that the market right now down by about 18 points. And you can see really there at 11:30 what happened to the markets at that time. The Australian dollar is the other one. So the Australian dollar has got much stronger off the back of this, and suddenly it's jumped above 67 US cents, up almost 0.5% today. You can see those live numbers there. And the final one I can show you is money market interest rates. So these are both the 2-year bonds and the 10-year bonds. You can see there that the 2-year bonds down slightly, as are the 10-year bonds. And again, this is really sort of, if you like, giving a view that Australia's economy long term is likely to avoid recession if these employment numbers do persist over the next few months.